Billing utilization in professional services has just hit an all-time historic low, 66.4%. That's the 2026 industry benchmark, and it's the third consecutive year that utilization has fallen. And at the same time, AI adoption has never been higher. More tools, more prompts, and more people using AI. So the question is, why is the margin going the wrong way? Look, I'm Mike Hiley, I'm a chartered accountant, and I've spent nearly 30 years working in and around professional services firms. And the pattern I see is this: 40% of professional services firms have now integrated AI at an organizational level. That's up from 22% from the year before, but only 18% of those firms formally track whether it's actually making any financial difference. So you have a situation where you have adoption real, investment real, but the business model is still deteriorating. Revenue growth across the industry has also dropped to 4.6% last year. 3 years ago, it was nearly double that. Utilization is at a historic low, and most firms are spending their AI budget on tools least likely to fix those problems. And that's what I want to talk about today. When firms start with AI, they usually start at the same place. I've said this before, but it's things like drafting emails, summarizing meeting notes, generating proposal content faster. And these things work. I'm not going to tell you they don't, mainly because I use them myself all the time. But they don't touch the two problems your business probably has right now. Number one, if your utilization is falling, proposing drafts faster won't fix that. And two, if revenue growth is slowing and your margins are under pressure, summarizing your meeting notes faster doesn't fix that either. In my experience, firms using AI only for drafting and summarizing rarely see it show up in their margin. The ones that push it into delivery and financial operations do. The question isn't whether to use AI, it's whether you're pointing it at the right direction or the right problem. Hey, if you're not sure whether your business is ready to implement AI, we've put together a free quiz that tells you in about 5 minutes. It scores you across the areas that actually matter and gives you a clear read on where you stand. The link's in the description. With utilization at 66.4%, roughly 1 in 3 of your team's available hours isn't spent on billable work. Some of that is genuine bench time, people available but not deployed. But a meaningful proportion is hours that got worked but never got captured. Because when you rely on manual time entry, people reconstruct their week from memory. They underreport and they forget. It's normal, but that's a utilization problem. But then there's a separate issue. Even when your hours are captured and billed correctly, it doesn't guarantee you'll get paid. Invoices go out late, they go to the wrong contact, or they go without the documentation the client needs to approve them. AR remains uncollected because no one followed up in a timely manner. And people who are regulars to this channel will know what I'm talking about. It's the realization problem, the gap between what you billed and what you collected. Utilization and realization are two different numbers, but they have one thing in common. Both of them respond directly to automation, and in most professional services businesses, both of them are still managed almost entirely by hand. So, what does this look like in practice? So for time capture, manual timesheets are delayed, incomplete, inaccurate, as we've just said. Not because your team is careless, but because reconstructing a timesheet from memory at the end of the week is just not efficient. So we built an automation that reads the person's calendar and pulls out the relevant entries and imports them directly into the ERP. The professional just reviews and approves, and they don't have to construct anything from scratch. I use it myself, and this has reduced my timesheet entry from 30 minutes per day to 30 seconds at the end of the week. Those hours are already worked, the cost was already incurred, and capturing is pure margin recovery. Then when it comes to sales invoicing, once an invoice is ready, someone still has to send it. And in most firms, that means manually locating the right contacts, assembling the required attachments, and putting together an email. We built an automation that handles all of that end to end. It pulls the invoice, it finds the right documentation, it locates the contact, the correct email address, and it sends it. No manual assembly is required. The invoice goes out correctly, on time, every time. On the payable side, most firms have someone manually keying in every AP invoice from the AP inbox, pulling the invoice attachments out of emails and keying the data into the accounting system. So we built an automation that monitors incoming emails, reads the attachments, identifies invoice, and loads them directly into the ERP. The team just handles the exceptions with no data entry. Look, I want to be honest about something. The use cases I've just described are not plug and play. They're not products you just subscribe to and switch on. They require your ERP to have clean data. Your project system and your billing data need to talk to each other reliably. Your time entry processes need to have enough structure that an automation can work with it. And in most firms, that foundation isn't there yet. And that's the real problem and the real reason why AI isn't moving the numbers. Not the tools, the data and the processes underneath them. The firms getting significant margin improvement from AI have already done the underlying work, but the firms with no margin improvement from AI haven't. Knowing which category you're in is the right starting point. Look, if you're not sure where your business stands, that's exactly what our AI readiness quiz is designed to tell you. It's a series of questions that just takes a few minutes to complete and will help you to assess your business's AI readiness. The link is in the description. And if this was useful, please do subscribe because I cover territory like this every week.